Hi everyone, it's your girl Tiana, aka the Paid Pretty Investor, aka the Forex Sniper Queen, and today we'll get into structure by really understanding structure and how it works. But before we get into that, let's go over some foundation and some keeping rules, some housekeeping rules. I'm not a financial advisor, I'm not a financial manager. The information that I'm sharing with you is just that information for information purposes only. Is based on my analysis and my observations. I would suggest if you want to try any of the information or any of the things that I share with you, if you want to try them out, try it out in a demo account. So without further ado, let's get started. So understanding structure, I realize a lot of people have trouble with understanding structure. Some people think they understand it, but really don't, how the market moves. So the market moves in terms of going up, going down, and going sideways. So the market moves, as I said, you'll have upward momentum, you'll have downward more momentum, and then you'll have kind of like choppy momentum where the market is just in a range from here to there. With that being said, you have to find out the best place to enter the market. That's what most people who trade have problems with, their entries. And to understand your entries, you can enter off either of these patterns, whether you're in an uptrend, whether you're in a downtrend, or whether you're in a ranging market. So let me explain something to you first about the ranging markets, because I feel like most people are afraid to get in the ranging markets. With the ranging market, the thing with that is the range is just accumulating orders on both ends. So you'll have people up here, they'll sell from up here, and you'll have people buying from up here, and they kind of just get caught up in the confusion of the going back and forth. When that happens, the market makers or the power that be, of course, they benefit off that. But what if I told you this momentum of it going sideways, yes, the sideways momentum is just usually, it's either setting the stage for to go lower, or it's setting the stage to go higher. That momentum of a range is simply a wick entry on a higher time frame. So when you're looking at ranges, they're usually entries or exits, depending on the direction you're trying to go in for the trend that you're trying to catch. And I just want to start off by saying the trend is your friend until it is not. Meaning, when you're looking at the higher time frames, you're looking at the monthly, weekly, and daily to locate the overall direction, momentum in the market. The 4 hour and the 1 hour, you're looking at those time frames just to get an understanding of where the money is in the market or where the liquidity is in the market. And then the 15-minute and below, you're looking for your entries. I was once told, if you always know where you are in the market, you'll never be lost. And I believe that's true, because if you understand the structure and the range of structure, how it works, you can figure out where you are in the market. You just have to be patient and wait a lot of times to see how things play out before you look for your entry. Now, with going in, let's say, in the upward momentum, you're always entering down low. The same thing when you're going in a downward or you're in a bearish momentum, you're entering from the high, right? So when price moves to the high and to the low, you have to, let's take it to the charts. You have to find what is that range for that time frame. And understand this, I didn't show it, but as the way you understand the direction or the trend of the particular time frame you on is through breaks of structure. Price will break either up or down, and depending on the trend, if you're in a downward momentum, meaning you're bearish, when price should continue to break down, that lets you know it is still in bearish momentum. If price breaks up and you're in bearish momentum, one or two things is happening. Either there is a manipulation of the market, or there is a break of structure to the opposite direction, and price is going to reverse. So those are the only two reasons why you have a break of structure in the opposite direction of the momentum you're going in. So like I said, let's take it. We're on GBP USD. Let's look at GBP USD. Okay, so let's just take it from, I'll take it from the top. Let's take it from here. So in terms of ranges, like I said, we're trying to find the tip, top, and the bottom. Like that's how you start off on a higher time frame. I'm not going to do all time frames. I just want to give some examples. So here we are at the top. This is the very top. The very low of this move here is this one right here. So this essentially is the range that we are playing in for the 4 hour, right? Once this has broken, completely broken, now we're looking at the next range, which essentially is this right here. That is how we determine what the ranges will be. Again, if you have a break in the opposite direction, if price breaks past this, price can wick past this, price can have like 2 candles past this, but when you have multiple candles up here, that is a break of structure. So let me show you on the lower time frame. Let me just do this, okay? So we have this break of structure right here to go lower, right? If I scroll in a little bit, we have more structure right here. Price did not break right here, right? We're waiting for price to break down here, but price did not break down here. Let me draw this right here. We did not have a break of structure right here because this is our lowest point right down here. But price didn't break this until this right here. So when price broke here, this became our new structure from here to here, right? And I know some people are gonna say, yeah, but price broke right here. Well, essentially, if you look to your higher time frame, which is why you have to go to your higher time frame and your lower time frame, you'll just see on the higher time frame, which is this daily, you just had a few candles above the high. This wasn't a break of structure, right? Because if this was the range right here, the daily range is more often different than the 4 hour range, and it will change per time frame. Your ranges will be slightly different. So, and keep in mind, depending on what time frame you're looking at, the trend will be different as well. And I could even take this up to, let's say, the weekly. You may be able to see it a little better on the weekly. You see that? This on the weekly is consolidation. Look at that. It's just an area that was consolidating back and forth. That's all that was. So again, remember I told you when you see consolidation, there are entries as well as exits. And on the higher time frame, there are wicks. Of course, on the monthly, it's not going to be a wick. You would have to be able to look at a higher time frame because this was something that we saw on like the weekly. But keep in mind, you can still enter off those time frames. Get a entry from the top, because remember, I told you can go both ways. You can trend versus counter trend off of these areas. I'll save that for another video, but I just want you to know that that's something that you can do. Right, taking this to the chart. All right, so on the higher time frame, that really wasn't a break of structure. And to be totally honest, this is more, this right here is kind of like inner, I would consider this before this actually happened. this was more like inner liquidity, this whole little situation right here, because this essentially was the real high right here. But when you're right here, you don't necessarily know that until it actually happens, or you look for price to tell you, and you look for price action. So let's go to the 1 hour, and I'm going to show you again on the 1 hour. I'm going to clear this chart all the way off because I want you to see how different time frames show different things, right? And I'm just bring this over. All right, so you're looking at your lows and your highs. You want to look at the highest point to your lowest point. And sometimes you can even turn on your line chart. It may be easier for you to see your high points and your low points. So even if we did, let's say, if we took it here, it looks like that may have closed below. All right, let's say we were in a range. Let's say we're in this range right here, right? If this is our actual range, price does not, we're in a bearish momentum. Price does not turn bullish until it breaks above here. What will happen though, as we go down for the sale, when it's time for price to retrace, price will retrace going up. That doesn't mean the 1 hour is bullish. The 1 hour is still bearish. However, we have inner structure that is bullish. I hope that makes sense to you all. So here we go again. Let's talk about the inner structure. So let me just make this right here. Okay, when looking at inner structure, you're looking at highs and lows being made, right? And inside your inner structure, when the highs and lows are made, you will have the same thing. You will have breaks, a low, a high, followed by another low, a high, a low, and you'll continue on. It'll do it over and over again. This is another low. Why we don't have a high yet? Why don't we have a high in this situation? Well, you're waiting for a price to break. Now, you have to understand what it means for a structural break to actual happen. So I don't count any of this as actual. I'm not counting any of this as an actual separate pullback. It's all in one for me with this one. So I come up to here and say a high, and then I go ahead and I count this as my next low. I know some people will count this one right here, but I'm counting this one down here as my next low, right? You want to look, you're looking for basically your swing highs and your swing lows. Price comes back up here, comes down, right? Let me scroll it over some. And then it comes back up. Boom. People say, oh, it's a break of structure. No, it isn't. Price didn't surpass this area right here. And I know somebody's going to say, but look at this area right here. Well, look, because think about this. We're still up here. This is the main structure up here. This is the high, and this is the overall low. This structure down here, like I said, this is inner structure. This just means that price may go up for a little bit before it comes down. But if price is truly going up for a little bit, you'll have multiple, you'll have more than one of these breaks. You'll have two of them at minimum break, right? So price has come down, and then you're looking and price drops. Why did price drop right here? Well, we're looking at structure, and we understand structure from the 1 hour time frame. We can take this to the lower time frame and kind of investigate. So if if I'm looking at structure on this 1 hour, and let's say I see the price from, I want to say, okay, from right here, I didn't have my low yet, right? Price did not come down here. And price came up here, above here, I understand, but remember, go to your higher time frame. This is just wicks on the higher time frame. Let's look at the 4 hour and let me show it to you. Or maybe I need to go a little higher. Look at that. Just wicks on a higher time frame. That's this right here. That's all it is. Wicks on a higher time frame. So it's truly not a break of structure. The market is fractal. So what happens on one time frame definitely happens on the next time frame. You just have to understand what you see, right? Why did price play into the place that it played? Price came into the place, price play into the area it played into because price always comes to its starting point. Wherever price starts, it ends. It happens over and over and over again. Price, wherever it starts, it ends. So you have to understand that price will always come back to meet where it started from. So in understanding that, let's go look at the lower time frames. Okay, because we were up here. We want to know why price pulled back. This really isn't a part of structure now. This is more entry, but I'm just going to show you this one simple thing up here, why price pulled back. Price pulled back into this area simply because of this candle right here. This pattern right here. Price pulled back because of that. This is a reversal pattern. This reversal pattern at a high point suggested with high probability that price would drop. Once you find this area, you just have to find on the lower time frames. I know this is the 1 hour time frame. You have to look for an entry on your 15-minute or below. Within this candle, you will have an entry. Your entry probably is going to be about here. And I'm just going to drop down to show you that. And then this is your entry right here. I know I'm like a pip off looking at the 15-minute, but this is your entry right here when price comes up to here. Remember, this line isn't a line, enter on the line. It's an area. This is an area that we want to enter into. And then if your line isn't placed directly on the candle, if it's off a little bit, that makes it a little bit more difficult. So I don't want you to get stuck on the line. I want you to understand the area. But if you were looking at the line, just know it's a few pips off. But you can just keep getting lower and lower and looking at these things. Let's see. Don't know what time that was. Okay, this is the 21st. 28th, excuse me. September 28th. I'm just going to stop right here after I get here. I don't know why I didn't go. Let's try it one more time. Okay, here we go. Look at that. On the lower time frame, you can actually see price come past that area and come back into it. You weren't able to see it on a higher time frame, but on the lower time frame, you were able to see it. So I just want you to understand the fractal nature of the market and just going with structure, understanding that in this time frame right here, right, this was the new low that price has broken down for this time frame. So now price coming breaking below that price essentially would be back attracted to that area, this area right here for an entry on another time frame. But I hope that helps someone understand structure a little clearer. That's going to be the end of our video for today. Please make sure you like, subscribe, and share. If you have any comments or want to see anything else, please put it in the comment section. But again, I thank you, and you all be safe in those trading streets.